You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting, ever-compelling, ever-thought-provoking Options Insider Radio Network. Again, check out the latest additions to the network if you haven't had a chance to do so. Options Playbook Radio and the very hot, very controversial Trading Tech Talk, where we break down all of that crazy stuff going on in the world of HFT, how it impacts your trading, how it impacts the markets. We lay it all out there. Have some great guests already. It's still a brand new show already. Lined up some great guests. More coming down the pike. Really interesting stuff. Trading Tech Talk. Check it out. And while you're downloading those, of course, make sure you download our mobile app available for iOS, Android, and Kindle Fire. You can instantly stream all 300-plus episodes of the Option Block. That's quite a bit of listening pleasure right there, as well as download them for offline listening. And then if you have a question or comment, you hit that email button right there in the app. Fire off a question, fire off a comment directly to the hosts of your favorite programs. A lot of great stuff cooking in there. The Options Insider Radio Network mobile app. I think you're going to like it. All right, and joining me on the old All-Star panel, we have a full complement once again, starting off with the man who couldn't make it on the last episode, but he's back now and better than ever, Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always good to be here, and quick news of note, I'm actually celebrating my 10th anniversary today on the option of my marriage, but I'm on the Option Block today, so exciting day.
I was going to say, 10 years on the Option Block? Were you doing this for like 7 or 8 years before I knew about the show?
Yeah, you owe me some money on the copyrights, but my attorneys will be in touch.
I didn't know you were practicing for so long before we finally started. Well, good to see you put the effort in before the show went live. We appreciate that kind of stuff. Well, of course, congratulations, sir, on your anniversary. We'll try to get the show over quickly so you can go celebrate it with someone who's much better looking than any of the rest of us here on the panel.
Oh, you're talking about me? Well, thank you.
Well, yes.
Oh, wait.
Of course. Of course. Spend the evening looking in the mirror, as I know you are wont to do, sir. All right. Of course, I'm not talking to Sebastian, but we do have his better half here on the program, Mr. Andrew Giovinazzi, the Rock Lobster himself from OptionPit.com. Andrew, you don't spend all your nights staring in the mirror, do you, like Mark does?
No, I was getting lessons from Mark, though, how to do that. And he actually he's really good at it. He could actually be a mirror mentor, as it were, if he wanted to take that as like sort of a second job in life or something like that.
I think that would work out pretty well for him.
Yeah, it might work for him.
All right. And speaking of mentors, the final seat, the hot seat from OX by Charles Schwab, is filled by none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Good to be here, Mark. A real interesting day. Not a busy day, but a very interesting day. If you're a Dow theorist, the trannies were up 40. That means if the Dow and S&P rally next week, we're going to have a confirmed buy, which is interesting. The other interesting thing today is very low vol. Apple under 20, IBM in the 15s, Google in the 18s. Those are numbers we have not seen, and before I say in a very long time, those are numbers we have not seen. So a very interesting environment, very interesting undercurrent in what's going on in the market today.
You're right. A lot of weird stuff afoot. Let's get right to it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break down what was trading, what was moving the markets, what was lighting up the old tape today. Like Alex said, not a super busy one, but some interesting stuff going on. Most of the major indices closing up fractionally on the day, but nothing really leading the charge in one direction or the other. VIX cash also closing up a wee bit today as well, nearly a full percentage point to a little over the 12 handle. So we'll start there. That is perhaps interesting in and of itself. We are, of course, listeners, recording this on Thursday, May 22nd. We are heading into the long Memorial Day weekend here in the States. And usually when you see a long holiday weekend on the horizon, you know what happens to the theta. You know what happens to the options out there. They get crushed. They get annihilated. So the fact that VIX could hold any sort of level going into this weekend is pretty impressive in and of itself. And perhaps someone was actually buying a contract or two out there today. Senior Rock Lobster, was that your take as well? Were people out there scooping up perhaps some downside in the S&Ps in case something happens of interest this weekend?
Yeah, I mean, there was a little bit of buy. I mean, actually, volatility was, the VIX cash was down. There was pretty much selling across the board everywhere earlier in the day when we were rallying. I think we got close to 12. Almost at 1900. We pulled back from there a little bit. They got close again. But the vol definitely sank a little bit. And then somebody turned a switch here at the end of the day and got a little nervous and started buying it up. So, when you look at it, you go, well, we're not moving a whole lot. That's about all you can say. But with this low of VIX, it doesn't take much to get things to ignite, but as of at least right now, I would say we're not moving a whole lot. And while I did see some action, there was some buying in VIX options. Vol was up in there. Most of the paper was buying. I think everybody is trying to be the one to scoop the bottom in volatility. They were trying it at the 14 handle, then the 13 handle, now the 12 handle. And just from, we were in our chat today and just looking at how volatility trades. And once it's this low, it has a hard time going lower. It goes low in little tiny drips and drabs for the most part. Maybe 25 cents a day, to 50 cents a week. Because it takes a lot of steady selling in the market to not really do anything in order for vol to keep going down. So we have started that process. I don't know how deep we're going to get into it. But at least by the end of the day, everybody sort of bid everything up again. I think they took so much out of the weekend yesterday and into the morning that there was a little bit of worry because all of a sudden, we got one more day. There's one more trading day. When you take the weekend out on Thursday, you still have one more trading day on Friday. So, and that's kind of where we are. So I think overall, though, the economic news seems okay. And I think ever since Yellen announced that the Fed is starting to look at ways to raise rates, we've rallied 1% from there. That's not nothing. And I mean, Alex probably will tell us, when was the last time we rallied when we talked about really, the possibility of raising rates because there's economic growth, or there could be economic growth. So again, it's trying to get out of this post-crisis mentality and into what could be, kind of a slow economic growth period, which generally is okay for stocks and not too good for volatility. And it feels like we're starting to get into that. I don't know if we're there yet, but it sure feels like we're. I mean, the market's at highs and VIX is at 12. So if we're not here now, when are we ever going to get there?
Definitely testing those waters at these levels here. Uncle Mike, we missed you on Monday's episode, so you have a double dose to hit our listeners with. Aside from emergency dental work, what else has been taking up the BBI over there at RCM? What's been catching your eye out here today?
Well, a couple things. The first thing, just to kind of add to Andrew's point, was in terms of theta being taken out. I was actually in a put spread on GLD, short the front this week's 123 halves, long the 120 halves, and I was looking to probably not get out of it until tomorrow unless we had some type of a pop in the market. But gold did come up a little bit towards the open today, but I was not expecting to have that spread go down to the level with which it was. But I'm looking at it and I was wondering, wow, we have a drop in vol. But then I realized, we got a weekend coming up, so that could be a reason as to why that's happening. So I definitely experienced that firsthand this morning. A couple other things just to kind of also add to what Andrew was saying in terms of the VIX being low and the market being high. Right now, I'll go ahead and I'll get it out of the way. Never before in the history of the market has there ever been a better time to sell your SPY than right now, within a percent or two, within a few pennies anyway, or within $1 anyway. But a couple of things with a lower VIX, along with the market close to its highs right now. I want to see us break through this 1900 mark and stay there for a while. If we do that, I could see a lot of reason for upside. But I think we're at a key point in the marketplace right now, in that we're still just kind of hanging out here in this sideways level for a long time. The close of SPY last year in December, or on December 31st of last year, was $184.69. Right now we're roughly $5 above that right now. That's not a lot of movement. So with that, I think we're at a key point in that if we can break above these new highs, then I think we got a lot more upside. But the combination of low VIX, us not being able to really establish that much movement in the market at these levels, combined with the fact that we have summer coming up, it's a lot of interesting things going on.
And what about Alex's point earlier about some record low levels and some beloved names to you, like that fruit company? Has that made you perhaps scratch your chin and say it's time to increase our long premium positions out here? Or is that you still pretty much playing long stock and that's it, or long stock and long put?
Long stock, long put for now. It's making me scratch my head in that I'm not selling any spreads against it. But what I do plan on doing is I want to see us come up a little bit more, and I'll probably start selling some upside against it in the near future, going into this, or probably around the time of the split.
All right, and Mr. Alex, you alluded to it earlier about some weird stuff going on. We also had some interesting news coming out right before we started recording, with a lot of interesting mergers being announced and perhaps takeovers right before the close there, or right on the close, I should say. So why don't you walk us through all of that stuff that caught your eye today, Mr. Viceroy?
So I don't have all of it, but the big thing that caught my eye was the HP announcement near the end of the day, and they disappointed again. The stock is down, and they've increased the size of their layoffs. They added an extra 5,000 to their layoffs. So obviously not good news. But I do want to pick up on what both Mike and Andrew said, because I'm the contrarian here. I see the trannies hitting new highs. I see the VIX trading at new lows. I think it is very possible, and I've talked about this before, in the years I've been in the market, the biggest moves have come off what was, in hindsight, low volatility for that period. And with the trannies taking out their highs, and as Mike pointed out, the spider is only up 2.5% this year. But if you annualize that out, that's about a 6% annualized move, and that's pretty typically what we get from the market, 6-7% over extended periods of time. I am very bullish, and there are a couple things that make me bullish. Number one, the low vol, which I think is going to go lower. Number two, I worked remote today, and I actually have a Schwab cell phone, and I got a handful of calls today. I normally don't get a handful of calls in the course of a week, but I got a handful of calls today from folks in the field, Schwab folks and OX folks in the field, who all wanted to structure bullish trades on the VIX. And I obviously can't go into a lot of customer information, but most of these people weren't traditional VIX customers. They were fixed income customers. And because I worked at SIBO when the VIX was created, I'm like the resident VIX expert at OX. Let's keep in mind, no one is an expert on volatility, and anytime you figured out volatility. But the amount of customers who were looking to sell puts, didn't understand why the puts were so cheap because of the misunderstanding of the pricing off the future, the forward pricing. But the amount of people who wanted to sell puts and buy call spreads, which we saw a lot of today, and the industry saw a lot of today, means a lot of people are betting on this VIX going a lot higher. And that also makes me bullish because I'm a contrarian. And I just can't lose the imprint of the trannies up 42 points today, led by the airlines and the rails. I thought I would never in my lifetime say the airlines and the rails were leading indicators. Certainly not the airlines, but you know, we could have a Dow buy here. You know, as Mike pointed out, if we take out 1900 and sustain it and set a new high on the Dow and the S&P, accompanied by a new high in the transportation, all the fundamental Dow theorists see that as a buy. So I think we're going higher. I think VIX is going lower.
I like your contrarian stance, sir. I can't tell if we have infected you with our deep-seated cynicism here on the panel or if it's the other way around. I don't know. But either way, I like your take. And I was going to get to this later, but since you brought up people leaning that the VIX is going higher, you might as well discuss it now. Earlier in the week, we saw a massive upside call spread going up in the VIX to the tune of about $13 million worth of premium going on the block here. In particular, we saw it was out in September, so a little bit longer term than a lot of the VIX paper we see these days. And it was essentially the SEP 1928 call spread going up 150,000 times. So 300,000 contracts total. Again, someone looking for some sizable upside here in VIX. Of course, this is probably all against some large OTC variance position or something else that we have no insight into whatsoever. So we're kind of only seeing half of the trade, one leg of the trade here. But still, going back to Alex's point earlier, people leaning that the VIX may head north sometime in the near future. This guy putting a lot of money where that mouth is. And just to hit on the HP tip for a minute as well, they are, of course, reporting after the bell. They closed today $31.78. They were off a little bit intraday, about 0.75 of a point. And looks like now in the after hours, they're taking some more off here. It's down about 75 cents or so right now in the after hours, which is pretty much in line. That 31.5 straddle went out around 85 cents or so. So it's pretty much in line with what they were pricing here so far. But volume-wise, HP just knocking it out of the park today, doing roughly 31,000 a day on average, and today doing over almost 250,000 contracts, all on that lead up to the earnings. So people piling in today, all of that pretty much to the downside, short about 70,000 net deltas on the day. So not surprisingly, a day when it's already selling off going into the earnings, people piling in on some downside activity. We'll see if this keeps up here in HP through the after hours or if it starts to tail off and perhaps rally back a little bit. We'll keep an eye on it. Some other things that are worth keeping an eye on, just mentioning here on the show. We're always talking on this show and a lot of the other programs on the network about, wow, all the crazy errors, all the crazy issues popping up in the options space. A few weeks back, right around the time of the options industry conference, Amex had the most recent sizable error, busting about 500,000 contracts in the course of a few minutes out there, printed erroneously. Just the latest in a series of tech errors and issues that have been popping up in the options space lately. I know a lot of you guys out there in the audience, even a lot of active retail these days, starting to say, wow, I'm starting to worry if maybe I should start canceling some of my farther out of the money type orders and things like that in case we see some of these crazy type events popping up again. Well, There has been some action on that front, listeners, you'll be happy to hear. In particular, the OCC, which is the Options Clearing Corp, kind of the big mother hen group here that clears all of the trades that go up on all the different exchanges, sitting down with the different exchanges and saying, hey, we need to really get a handle on that stuff, start adopting stricter risk controls. This, of course, on the heels of the SEC coming in and essentially ripping the options industry a new one, saying OCC, amongst others, needs to really get its act together from a risk control perspective. So they're stepping out with a bunch of new principles. Not all of these are finalized yet, listeners, but there has been some interesting developments. This is a huge document. I encourage you, listeners, if you want to find out more, surf on over to theoptionsinsider.com or surf on over to OCC's website. You can read more about it there. But a lot of pre-trade, post-trade risk controls being worked through, including things that would seem obvious but haven't been out there for a while, including price reasonability checks to determine if you're putting in some crazy, extreme, out-of-whack price that will be rejected automatically. A lot of exchanges having built that functionality and brokers as well on their own, but now getting some sort of industry-wide version of that. Also, drill-through protections, which will keep you from putting in and keep orders from trading in some unlimited number of price intervals. So if there is a big gap, you're not going to get filled at some ridiculous price far away from where you initially put that order in. Other things like activity-based protections, kill switches that cancel orders or block new ones based on previous triggers. And a big one that a lot of the industry has been pushing for in the wake of the recent fiascos, Goldman last year, and of course the recent Amex NYSE big errors, is some sort of obvious error rule. Everyone knows when the trade goes up that looks completely erroneous, the price makes no sense, the time, the volume, all that stuff makes no sense. And yet, for whatever reason, every outlet pretty much out there, every exchange has their own error rule. So if you're trading across multiple exchanges, or if your order is filled across multiple exchanges, and then we have one of these situations where a big error pops up, you listeners may have to find out, or most likely your broker may have to find out, hey, are we busted here? Are we busted here? Are these trades good? Are they being adjusted? That process could take a long time, which, as you know, if you're hung out there on a long time on an order that you don't know is being filled or adjusted, that's risk that you don't want to have. And so having some sort of obvious error rule that everyone can get behind will go a long way towards speeding up that process. You'll know instantly, hey, this order qualifies for the obvious error rule, this one doesn't, so you'll know if you're being filled or adjusted or busted right away, which is a great thing. And they have a bunch of other post-trade stuff as well, including price filters. And this is interesting. Trades identified with prices exceeding $2,000 will be subject to manual review for reasonability by the OCC staff. So I'm sure the staff over there loving the fact that they get a bunch of manual reviews coming their way. But still interesting stuff. We're seeing a lot of headlines about how dire things are from a risk perspective in the options and derivatives markets. Nice to see some steps being taken proactively to try to address those in the near future. If you want to learn more about that, read the full document for yourself. Again, I recommend you surf on over to theoptionsinsider.com or on over to the OCC's website. You can read it all in full there as well. All right, and with that, we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, a portion of the show where we break down the weird, the unusual activity that's lighting up our collective tapes here. And in keeping with Alex's talk of trannies earlier, we're going to kick things off with HMSY, ticker symbol HMSY. This is, of course, the HMS Holdings Corp, closing today $17.63. Pretty much unched on the day. This is the name that does about 400 to 500 contracts a day, doing pretty much 2,000, so roughly 5x their ADV today. And a lot of that coming in one pretty substantial put buy. In particular, it was on the June 15 strike. When we profiled this, we saw about 1,000 going up this morning, went up in scattered blocks throughout that early time period. Prices ranging around 35 to 40 cents. So, yeah, with open interest on this strike of about 2,500 contracts, seems like this was closing. But again, we'll have to pay attention to the OI numbers tomorrow to know for sure. If it is closing, this thing just bounced off the 16 area. Maybe they don't want to give up anything they perhaps made on this strike. In the interim, All right, Senior Andrew, what's your take here on what looks like to be a pretty straightforward closing put buy in your favorite name, HMSY?
Yes, HMSY. That's the name on everybody's lips, actually. HMSY.
I check it every morning with my coffee.
It looks like just pretty much a straight put close with what looked like a successful trade. Stock traded lower. Looks like there were some put sellers came running in there. And at this level, I think they close them. They probably made about, they probably sold them for $1 or more. And they're taking their money and hitting the road. It all came in, I believe, kind of scattered blocks. So, and I don't know if it was a newsletter trade or something like that. But it felt like, it just felt like, like a newsletter close or something like that. When it was pretty good, because I think they sold a pretty much doggone bottom.
All right, next up on the old odd block, Big. This is Big Lots Inc., ticker symbol BIG. Closing today, $37.87, up about $0.50 or about 1.5% on the day today. This is the name that does about 1,700 contracts a day, which from the usual odd block names we profile here is a ton of volume on a daily basis. This doing today about 3,300 contracts on the day, and a good chunk of those coming again on the put side of the fence, although this time looked like we had some put sellers. In particular, it was the July 32 half puts going up 1,000 times for 35 cents, went up in one big block. Open interest, only 250 contracts, so clearly opening paper here. Looks like it's a mildly bullish play going up with earnings coming out about a week or so from now on the 30th. We also saw later in the day a 1,500 lot of the June 37 hats puts, a little bit closer to the earnings number. Perhaps that is related to the earlier 32 half puts. We'll see 4,200 contracts open on that strike, so that indeed could be closing. He could be taking some of his June position and perhaps rolling it out and down to the July 32 half strike. Senior Rock Lobster, parse this one for us. What's your take on all these puts slinging around in Big?
I think somebody thinks Big's not going down. That's what it kind of feels like. I mean, it had this giant move. Okay, remember, this is like a retail stock. And last earnings went from like $30 to $36. I mean, it's a huge move for, okay, they sell stuff for $1, all right? So it was kind of a big jump. So
that's
again,
a lot of dollars, sir.
Huh?
That's a lot of dollar items they moved.
That is a ton of dollar items. So I think, looking for selling some out-of-the-money puts, they're not going to get a whole lot of decay between now and the earnings, so they could have just waited for the day before. I still don't understand why people do that right into the earnings, but considering they're just not going to, those options won't move more than a nickel between now and then. So you get all the extra risk for none of the theta enjoyment, I might add. But yeah, it looks like, bullish play. And like these dollar retailers, their day in the sun is not over.
Yeah, apparently still some money in those dollar-type stores. I know Tussaud loves them, so maybe he made some big shopping runs last quarter, which led to that 20% spike in Big Lots numbers.
Where do you think I got the anniversary presents?
Ah, there we go. Now it all makes
you
sense.
Can get 10 presents for $1. That's a good deal.
I will say this, just anecdotally, no better place to bring a little kid than the dollar store because they think like they're getting the world's worth of presents for about $5. So they think you're the best.
It's great kid entertainment, but if you make it a wife gift, you will pay for it later in the marriage. They never forget.
Look, honey, I cleared out the dollar store for you.
I have my own.
I gotta go, guys. Crap. Why do you have to say that, Alex?
We just came through Mother's Day. You guys know I'm a watch collector, so every year it's a watch, and it buys me about a month's worth of peace.
I have a cruel game. We go to the penny candy store, and I give my kids $1, and I make them agonize over their choices. They can't spend more than $1. So the problem is it takes them like 35 minutes to buy $1 worth of candy because they have to do the continual, well, I got to put this one back for a quarter and get 3 of these gumballs for a nickel. It is cruel, but I do enjoy it for the 30 minutes that it happens.
And then when they go to a $75,000 college, you'll ask yourself how they pick that.
We don't have those in Maine.
Yeah. Don't worry
Actually,
about
we
it.
do, but we won't be sending our kids to any of them.
Wait, watch what happens.
The Yankee and my wife will not allow that to happen. I'm just saying.
All right, and moving on to everyone's favorite maker of soap and toothpaste and all sorts of fun stuff. Good old Colgate-Palmolive, ticker symbol CL, closing today at $66.61, down about 20 cents or so on the day today. This is a name that does about 4,500 contracts a day. Again, from an odd block perspective, lighting up the tape, and today in particular, doing 17,000 contracts, so big size going up for Palmolive here today. And what we saw in particular that caught our eye was rolling on out to the August expiration month. We saw a lot of activity out here in August, actually. The 62 halves, 65, 67 halves, and the 70s all being very, very active today. In particular, we highlighted the activity on the 70s earlier in the day on the website. We saw 6,500 when we wrote this up of the AUG 70s going up 4.34 cents. Sizable open interest on the strike, 9,000 to be precise. So it is possible this is closing. Of course, the trade went up as a buy right, in which case this could be piling on to the tune of additional rights here on the strike. If it is, it's not exactly maybe the best right we've seen on this name for a decently far out right here in Palmolive, but someone perhaps looking for a small bit of yield, particularly given the fact that the stock is hovering right around 52-week highs. This would be a pretty aggressive level, 70 here in Palmolive. It is possible also this is closing, in which case they're also taking this off for not a heck of a lot of return. So this is one of those trades that perhaps doesn't make a whole heck of a lot of sense. Maybe someone just deciding it wasn't worth the time, getting out of it, or whatever the case may be. Again, also interesting activity we didn't really profile. 1,000 of the 67 halves going up, 2,000 of the 65s going up, and 4,000 of the 62 halves going up. 62 halves only having 1,100 contracts open on that strike, so that is clearly opening paper. Perhaps we see someone starting the makings of a 1x2 out here, Senior Rock Lobster. What is your take on this weird plethora of paper out here in August in Palmolive?
You know, it is a plethora of paper.
Say that 5 times fast. It's fun.
Plethora of paper, plethora of paper, plethora of paper, plethora of paper, plethora of paper.
I didn't think you would actually do it.
It is a radio show, so you do kind of goofy things like that every once in a while. Like look in the mirror and, But anyway, I just broke myself up over that. I don't know why. This August 70, though, was the first of all the paper that went up today. And, just to say, Alex was saying about, there are all these kind of strange anecdotal bullishness. Like everybody just wants this market to crash and somehow it doesn't, and it could go down at some point. But you see what I think this was a buy right. You're buying Colgate, you're kind of near year highs, and you're writing the August 70 calls against it for 34 cents. Now, if you go to Mike Tusaw buy right school, that's a pretty aggressive buy right as far as.
I thought it was a Mike Tusaw stupid school.
Well,
which this could clearly be. Someone could have gobbled up all those strikes. I'm looking at you, Tusaw.
And it's just.
I need to finance the dollar store some way.
Exactly. They just want to be long. And, ultimately, this is a long delta trade. And the 34 cents for the calls is just kind of whipped cream on the top of the cake. It's not huge dollars, but, that is a market star for yield right there. If the 34 cents on the $66 number looks pretty good, but that's what the trade was. I would be surprised if this was an unwind of a synthetic, because if it was, they got annihilated on that. I mean, it is possible to lose money on a trade, but I'm guessing that they would, that wasn't much of a winner for them. But most likely a buy right, though, I think.
Yeah, weird stuff going on out there in Colgate. Now we're going to move on to our final name. This is one I'm trying to think if we've ever had the privilege of profiling this one on the old odd block. This is US Steel, ticker symbol X. Gotta love that ticker. Closing today, $23.85, pretty much exactly unched on the day. This is the name that does, of late, about 20,000 contracts a day, so a pretty sizable odd blocking name here. Doing about that same amount today, about 19,000 or so. So it wasn't pure volume that caught our eye out there as much as it was a particular trade. In particular, a very sizable put trade to the tune of 10,817 of the June 25 puts, going up for prices around $1.50. In particular, when we profiled this, the start of this trade anyway, earlier this morning on the site, we profiled 5,500 of these going up in one block for $1.50. Clearly more went up after that point for prices around that range again. We also saw another large block going up earlier as for $1.34 as well. Either way, it looks like someone perhaps closing out on some sizable long puts here. There's 12,000 open on this strike. Could be a decent winner for them. A couple of winners perhaps here in the odd block today, Andrew, which is kind of nice to see. We're not just profiling a bunch of people throwing away money on upside calls. A few potential winners here as well.
Well, a bull market loves options, or options love a bull market. That I think I made that up. But right here, I just think this guy bought some puts when X was a little bit higher than it was now, and they're just taking their exit and saying, thank you very large, we will go on. Because it is starting to rally a little bit, and the last thing you want is to make, some money on your puts, and then your slide kind of goes away. So I think it was probably a good idea to take their money and hit the road ski, since it was just, trading around the 26 plus level, even into like mid-April or late April. So it looks like, a nicely done trade.
All right, listeners, that's going to do it for the odd block. And because it is Thursday, it means it's your time to take the reins here on the program for a joint combined Express block / mail block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express / mail block. This is my favorite portion of the show each week because this is the time you guys get to shine here on the show. Let your questions and comments be heard. A lot of them, of course, coming through the Options Insider. Once in a while, we get to surface a few from OX clients as well. This first one actually seems like a little bit of both because he's clearly an OX client, and he's writing in to follow up on something you and I were talking about a couple of weeks ago on the show, Alex. He writes in, this is a comment from C. Barles, and he writes, I agree with Mark and the Viceroy. OX needs a caps lock detector on the website login page. I'm always forgetting that and having to log in twice. Very annoying. Please save me from myself. Well, there we go, Alex. I think that's 2 votes now for the caps lock detector on OX.
I have given it to product development when it first came up, but to be honest with you, the product development team has a very long list of things to do, but they do have it. So it's on the list. I worry now with integration that some of these things will take a long time till they get to address. So in all candor, I don't think that's an enhancement you're going to see in the next couple months. But PD does have it, and it's on their list.
Well, there you go, C. Barles. Maybe perhaps in the meantime, allow me to recommend one of those keyboards that has the caps lock indicator key on it. So then at very least, or a little light, so you can tell when your caps lock is on. I switched recently to a wireless keyboard. It does not have that, and it drives me crazy. I regret that purchase to this day. So there you go. Maybe save yourself a little trouble in the interim while you're waiting for OX to solve your problems for you. Next up, we have quite a slew of questions and or comments from a listener who goes by the handle Kaiser Dog. You may remember, listeners, he wrote in a while back, maybe about a month ago or so now, with some comments. He said he was a meatball in training, so I kind of joked that he was a big fan of the Option Pit Boys. And he wrote in with his response. It's pretty lengthy. I'm going to truncate some of it, and we'll get to his question at the end. But he writes, Mark, first let me thank you for using my post in the mail call. It made my day the other day. If you like that, I have a lot more where that came from. Just got done listening to Talking Volatility and enjoyed the show. That was indeed my interview from the Options Industry Conference with the guys over at Russell, talking about a lot of their volatility products. Listeners, in case you missed it, it's in the Options Insider radio feed and our main network feed as well. He goes on to write, I must confess I am not an option pit guy, just a retail investor who has a big hunger for anything option related and a fan of the meatball and the show in general. Well, I guess he has some taste there. He likes the show at the very least. He says, I bought Flash Boys the day it was released and have read it about 5 times. Thank you for your work on this front as well. Kudos to your unbiased reports. Please keep them coming. And then we have a little bit here. I'll just jump to the question. He writes, my question for the panel today is as follows. There has been a lot of talk about bubbles. I thought Hubba Bubba and Big League Chew were filing for IPOs. There has been so much chatter on CNBC and other media sites. The element that seems to be missing, undue euphoria and enthusiasm. I do not see it. I do not see retail participating in any big way. Volume is anemic and artificial, and he puts in parentheses HFT, in my opinion. I would love to hear the panel's take on the topic of a market bubble. In addition, I would like to hear everyone's take on the state of the retail investor. Thanks again, and cheers, Kaiser Dog. Well, there's a lot of grist for the mill here, Mr. Kaiser Dog. Thanks for writing in. Sorry we couldn't get to all your questions. We try to limit it to 1 or 2 per listener per show. But you do have some interesting comments here. First off, on the state of the retail investor and the bubbles. I kind of agree with you a little bit. There is all this talk in the media about, markets rallying, the bulls are out, yet we've been talking to Alex, and he's been talking to us about the volume they're seeing on their platform. Things are certainly well, but it's certainly nowhere near as robust as you might think if retail were participating in this rally en masse. In fact, a lot of people seem to be sitting on the sidelines even during the period of this aggressive rally. Of course, that means their 401ks, their IRAs, their trading accounts are also sitting on the sidelines, unfortunately not participating in a lot of this big upside move. Again, volume not as super strong. Of course, we are going into that portion of the year when volume tends to tail off. Anyway, I don't know if I would agree that all of it is artificial, because at the end of the day, usually HFT has to interact with somebody, and a lot of the times the other end of that HFT coin is a retail investor. So you guys out there doing 5 and 10 and 20 lots that are getting filled by these HFT guys, there may be an HFT on one end of that trade, but that doesn't mean there isn't a customer on the other end who's actually doing some legitimate economic activity. So I don't know if it's all fluff. I mean, maybe in the old days when Citibank was trading around $4.50 and guys were just fee arbing it all day, then maybe you have a different story there. But a lot of this still is legitimate customers on at least one side of the trade as well. I could keep going on the state of retail investor for a while, but I want to make sure you guys have time to chime in as well. Maybe Alex, we'll start with you. This is clearly up your alley. What's your response here for our friend Mr. Kaiser Dog?
So, being brutally candid, business was great through March. April and May have been slow. Trying to figure out if the retail investor is in or out is hard today, because so much of retail is ETFs. And the options on ETFs still remain the most active issues, but retail doesn't trade stock the way they used to, because they're substituting it with, an ETF. 10 years ago, if you wanted to lighten your portfolio, you sold 7 or 8 names. Today, you're selling one ETF, and then a lot of that gets traded in the institutional market. The percentage of option flow that's retail still hasn't changed that much, but markets are a little quieter. Markets tend to get quiet when vol is at this level. Forecasting a bubble, it's like when I go on OX Social and someone says next Friday will be Black Friday, and they're forecasting a Black Swan event. No one successfully forecasts that stuff. Everybody takes credit for it the day after, but no one successfully forecasts it. But business is a bit slow, and that's not uncommon when markets are near their highs. There are a lot of cross currents. There are still confidence issues from the the flash crash and HFT issues. Our hardcore traders are our hardcore traders, but there are folks on the fringe that do drop out, and they're not that active here right now.
What about his other contention there that a lot of this volume we are seeing is artificial in that it's just all HFT flickering?
It's some of the option market. Boy, it's a ton more in stock, but it is some of the option market. You also got to realize that the public the individual investor through direct investment has never been a big part of the stock flow in the last 3 decades. They're traditionally 7 or 8 or 9% of the flow. The lion's share of it is institutional trades, ETFs. Now, yes, those are individuals, but they're in their 401ks. Hasn't been a lot of rebalancing in the last couple years. I think that's part of it. But I think the observation is correct in the sense that things are a bit slower.
Uncle Mike, what's your take here from Mr. Kaiser Dog?
Well, in regard to the retail investor, I think that I would agree a lot of people are still on the sidelines. I don't have any statistics to back this up, but just from talking to a lot of people that are in the retail world, it does seem to have that feel. And it's funny because of the fact that 2008, even though it was 6 years ago, ingenious with my math, I know, it's still fresh in a lot of people's minds, it feels like, on the retail side of it. And so I think that's kind of a fear factor in terms of predicting a bubble. Unfortunately, a lot of the big league people that actually chew big league chew, I'm going to give you some inside information. A lot of times it's Skoal or Copenhagen or something that the kids shouldn't be chewing. So I'll leave it at that.
Mr. Andrew, take us home. What's your take here for Mr. Kaiser Dog, who's clearly a big fan of you guys over there?
As far as the bubble goes, I think he's right. There's no – until everybody agrees that the stocks can't go down, then we're kind of in a bubble. Everybody wants now to be Nouriel Roubini and call the next bubble. And I mean, if there's a bubble anywhere, it's because the government's holding, $17 trillion worth of debt. But nobody's really worried about that yet. So I don't know where the next bubble is. I mean, if stocks were trading in a bubble right now, if we're just going back to 2000, the S&P 500 would be worth twice what it is right now, on that PE basis. And it was trading like 35 times earnings or something like that in 2000. It's trading like 16 or something now. It's not cheap by any stretch of the imagination, but it's not a 30 PE average either. So, I mean, it was a different ball game as far as, that stock bubble. And, if the market, if the market pulled back to 1,500, I would be a huge buyer of it. That's all I can say. So I think stock prices are going up and people are starting to pay a multiple now that they weren't really paying in 2010, because it feels like, at least in a lot of minds, the euro's not going to get broken up. The systemic issues aren't as bad. Banks are much better capitalized than they are now. The consumer is less levered. There's lots of things. I mean, the only person that has that's borrowed so much money is the federal government. They, of course, conflate it all away. So for bubble-wise, companies do make money every year. And if companies are growing earnings at 5 to 8% or something like that, the market's going to rise. It rose from 1990. It rose from 2002. It rose from 1981. It rose from 1973. All on the back of earnings by corporations essentially doubled from one end of the cycle to the next. So now what people are willing to pay for that is, usually another thing. But everybody wants to call this a bubble just because stocks are at an all-time high. And like Tushar says, it's a good opportunity if you put money in your retirement and you stayed there, and all of a sudden now you got a whole bunch of money in. Maybe it's time to take 20 or 30% of it off the table, buy some, decent fixed income securities, and book the money and not worry about it. So, and if we keep going up, you'll still be doing fine. There's nothing wrong with doing that. As far as bubble goes, it's hard for me to say that there's a bubble in stocks. I've lived through a couple of bubbles, several different asset bubbles before. This one doesn't smell like a bubble yet, although it's easy for the market to drop, 8-9%. That could happen. It probably will be down at least 5% at some point this year. Easy, maybe more, maybe 8 or 9%. I see that. But that's just any market, So, but I don't think we're, all I'll say is we're not in a bubble yet. But I love the Hubba Bubba comment. Everybody wants to call the next bubble and be the man, but then there are other people who have to actually go out and try to make some money instead of just trying to call the top all the time.
Hey, as a diehard son of the 80s, I do love some Hubba Bubba and some Big League Chew myself. So for my money, not enough references to those fine products here on the old program. But unfortunately, that's all the time we have for the Express/mail block. Great questions, Kaiser and everybody else who wrote in. If you guys want to join them, you know how to do it. A lot of great ways for you guys to get in touch with us, including the mobile app. Make sure you check that one out. Meanwhile, it's time for us to keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, you know what time it is. It's time to tell you what we're watching for the rest of this week into the long holiday weekend. And as every time there is a long holiday weekend looming in front of us, the big topic, of course, on the panel is the decay. When's it going to come out? What's going to happen with it? Like we said earlier in the show, usually we've seen some of this already. I personally have never been in the camp, even when I was a market maker, of these guys who love to hit bids on Tuesday nights and Wednesday nights into Thursday because, like Andrew said earlier, you still have a couple days left in the week. You have no idea what's going to happen. Haven't seen that as aggressively hitting the bids this week as we've seen in previous holidays. We'll see if that comes into play in full force tomorrow. I have a feeling it will. And like we said many times on the show, perhaps you want to keep your powder dry if you haven't already sold at those premium levels you want. Don't just chase things into the weekend. Maybe you hold off, or perhaps, God forbid, you even buy a contract or two to have them in your back pocket in case the worst happens over the weekend. Ukraine goes crazy, something else happens overseas. You've got some long premium in your back pocket on levels that have already been adjusted to Tuesday or perhaps even Wednesday. So keep an eye out for some of those bargains out there. Uncle Mike, what are you watching for the rest of this week here?
Oh, I'm not seeing a lot of. I don't think we're going to have too much movement tomorrow. So I think I'm in the camp that I'm mostly going to be long premium going into the weekend, and just going to be waiting to see what happens next week. We're just right on the precipice of all-time highs, and he keeps teasing us with this 1900 mark, and want to see what we can do with it.
Such a big tease you are, Uncle Mike. All right. Mr. Andrew, what are you watching for the rest of this week, sir?
With our big one day tomorrow, I'm of the mind I think we will touch that or go past the all-time high tomorrow. Any kind of decent economic news will get us there. And I just think, there is some money out there buying some stocks lately. So some things are at a bit of a discount, especially a lot of the momentum stocks. They're still, I think a lot of them are ridiculously expensive, but they are trading at a lot more of a discount these days. So you could see just a little bit more buying, and that would not surprise me at all.
All right, Mr. Alex, take us home. What are you watching for the rest of this week, sir, into the long weekend?
Sovereign rates, looking at our 10-year, the British 10-year, and the German 10-year, and still shocked and amazed at how low rates are. Looking at the beaten down biotechs, I think in the coming months we will see more M&A activity in healthcare and biotechs, and I think that's going to be a space where some of these that are down 15 or 20% for the year are going to look very, very attractive. Just want to remind everybody that Monday is an exchange holiday, and I know whenever we do that or whenever there's an early expiration, I hate to say it surprises me, but there are people who get it wrong. We had that with the Friday holiday, a couple expirations back, and people got caught short, losing a trading day in the SPX. So really looking at fundamentals, Dow theory buy with the trannies. If the Dow sits new highs, it's a confirmed buy. I kind of like fundamentals more than I like technicals. So I think we got the makings of a good market. And this low vol is generally good. I mean, everybody calls volatility a fear index, and low vol has to be viewed as a confidence index. I think the surprises are going to be to the upside here.
All right, listeners, that's all the time we have for the Around the Block segments. Also all the time we have for this episode of the Option Block. But before we all head out to enjoy this long holiday weekend, let me check in one more time with each of my cohorts here on the old All-Star panel. See what they have cooking that may interest you. Starting with you, Mr. Alex, what's coming down the pike over there at OX Edumacation?
So our last live event for the month of May, Saturday, May 31st, live event from Philadelphia, Jimmy Rouzan and his crew. If you can't attend the event in person, we do it as a virtual event on the site. A couple webinars next week, again, because of the Monday holiday. Tuesday, the 27th, Jeremy Wagner will be talking Forex. For those of you that are OX customers and don't realize it, we have brought Forex back. So that's part of the all-in-one platform. Wednesday, the 28th, Nina's going to do a platform and site tour. And then after that, she's going to talk about collars in IRAs. And then on the 29th, Russell Rhodes from the Options Institute over at the SIBO, my old shop, is going to be talking volatility index products. So for those of you who are looking at the VIX or the RVIX or the Vixen, Russell will be doing that. All the events are free. Just come to optionsexpress.com, click on the Educate tab, or as Mark says, the Educate tab, and participate in one of the events.
I don't know if you know this, Alex, but I just got the word from product development at OX. They will be changing that spelling to Educate very shortly, so stay tuned for that, listeners. No caps lock detector coming, but proper spelling on all OX websites going forward. All right, and Mr. Rock Lobster, what's coming down the pike over there at the pit?
We have our chat room is up, and it's slowly gaining. About a person a day is dropping in new. It runs from about 10 till 2 every day, mostly talking about trades people want to put on, evaluating what's going on, evaluating the market, ideas. So far, it's so good. So get you some access to myself or some of our pro traders or some of our other, which are, I think, are pretty good investors that we have at Option Pit. And, it's a good source for information. So it's a good way to learn about options or look for things that you might want to do and have kind of a sounding board to bounce it off of. So that has been launched, and it is doing A-OK so far.
There you go, listeners. So if you don't get enough of Andrew on this show, twice a week isn't enough for you. You want the full daily Rock Lobster experience with a taste of Sebastian on the side, taste of meatball, then surf on over to optionpit.com and sign up for that chat room today. All right, and last but certainly not least, Uncle Mike Tusaw, what's coming down the pike over there at the RCM webinar train? I know you've been taking a bit of a hiatus. Is that hiatus coming to an end anytime soon?
Well, kind of. What we're going to be doing, the webinar hiatus is going to remain for the next few weeks, but we are actually working on some live in-person events and more information on that in the coming weeks.
Again, sir, you're nothing but a big tease to all of us here.
You got to keep them coming back.
All right, and with that, we hope you guys come back for our next episode. And, of course, we want to thank all of you guys out there for downloading and streaming and subscribing to the program, making it such a success. And, of course, for sending in such great questions. Keep them coming, particularly all of you out there who love to use the mobile app to send that feedback. We love seeing it. And on behalf of Uncle Mike and Alex and Andrew and myself, we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.